This is Business Report Nigeria, brought to you by your digital First Pan-African News Network, TOS TV. I am Ruo Panawo. In its February presentation, the National Petroleum Investment Management Services, NAPIMS, a subsidiary of the Nigerian National Petroleum Corporation, NNPC, had revealed that in January it incurred 126.17 billion naira worth of expenses, out of which 21.47 billion naira was spent on oil search in the frontier basins, the Nigeria-Morocco gas pipeline, and rehabilitation of the nation's refineries. Crude oil pre-export inspection agency expenses and pre-export financing cost 402.69 million naira, and renewable energy development financing cost 119 naira 83 million. 20.23 billion naira was spent on all the projects, and eventually 90.85 billion naira was remitted to the Federation account in January. In a weekend report, the IMF Director, Monetary and Capital Markets Department, Tobias Adrian, revealed that dollar loans put local currency at risk. He said borrowing in foreign currencies in international bond markets can leave these countries exposed to volatile exchange rate movements. Nigeria has not been present in the new market issue for a while, and so Nigerian Eurobonds are not oversupplied. This means the country has a good track record in paying back both interest and principal. However, to avoid risks from currency fluctuations, many had invested large resources in recent years to develop local currency government bond markets, which can have a wide range of benefits when they are developed, as they become more stable and less risky sources of funding to make debt more sustainable. Regardless of these facts, smaller and often riskier markets emerging must be careful, as they still have some catching up to do. The Governor of Central Bank of Nigeria, Godwin Emefiele, Minister of Communications, Dr. Issa Pantami, and the Executive Vice Chairman of the Nigerian Communications Commission, Professor Umar Dambata, will meet with banks and telecoms operators today, March 15th, due to the threat issued by telcos to disconnect unstructured supplementary service data, USSD, to banks today. On Friday, March 12th, the Association of Licensed Telecommunications Operators of Nigeria had announced that telcos would disconnect banks from USSD services today, March 15th, due to their debts of over 42 billion naira. In response, the Minister of Communications, Pantami, has called for a meeting with all stakeholders, including the Governor of the Central Bank of Nigeria, to ensure an amicable resolution that will determine the next steps concerning the status of USSD financial services. In 2020, some contracting firms in Nigeria, 6 Lebanese companies, and some individuals as well were indicted for fraud and corruption. They have all been blacklisted by the World Bank after the Bank Group's Sanctions Board indicted them of various fraudulent and collusive practices, considered infractions to established regulations and breaches of its contract and consultancy procedures. As a result, they have been disqualified from participating in the award of any World Bank finance contracts or consultancy services by any of the affiliated multilateral development banks, MDBs, between December 18, 2020 and March 17, 2025. The blacklisted companies include Abu Ghazaleh Contracting Nigeria Limited, AG Vision Mining Limited, Infrastructure Construction Nigeria Limited, Topfield Construction Nigeria Limited, Verdant Construction Nigeria Limited, Legio Global Construction Services Limited, and AG Vision Construction Nigeria Limited, and the blacklisted individuals, who double as affiliates of these companies include Eli Abu Ghazaleh and Fadi Abu Ghazaleh. There's more coming up on Business Report Nigeria. I will be back after this short break. Thank you for staying with us. The state of insecurity in Nigeria has raised fresh threats to economic recovery in the country as bandits and terrorists keep swinging through. Now, the country has suffered 2 consecutive negative GDP growth in 2020 due to lockdowns induced by the COVID-19 pandemic, followed by a second recession in 5 years. Regardless of this, the country made an exit from recession in February, and the economy grew by 0.11%. The IMF even projects further 1.5% growth in 2021. In 2020, Nigeria attracted a total foreign direct investment of $2.6 billion, as opposed to $3.3 billion in 2019 and $6.4 billion recorded in 2018. Banditry has not been resolved, and a 2020 report by SB Morgan Intelligence said between the year 2011 and 2020, Nigeria paid the sum of 7 billion naira as ransom to kidnappers. Security challenges keep forcing many farmers to abandon their farms and discouraging foreign investors. Food inflation has been overwhelming as well. Stockbrokers have urged the federal government to focus on raising bonds from the capital market to finance revenue-generating projects and reduce balance sheet borrowing. At a virtual meeting, they placed emphasis on the fact that the government serves as an enabler to creating the conducive enabling environment for policies, security, and good leadership that will ultimately support business growth and development. And so there is need to develop an investment framework representing contracts and compensating investors when necessary. The Director General of the SEC, Lamido Yuguda, has said it is expected that the capital market will be leveraged to generate the needed funds and boost infrastructure development in the country. The Nigerian Stock Exchange, NSE, all-share index and market capitalization depreciated by 1.74% at the close of the week. Expert analysts have said sentiment is expected to remain bearish in the near term, with investors leaning towards the fixed income space. Then they urged investors to increase their stake in blue chips because that downturn presents attractive entry opportunities in the equities markets. Property owners who fail to heed the compulsory insurance of public buildings and buildings under construction when the Insurance Industry Consolidated Bill is passed into law will face the penalty of non-compliance. This means defaulters would face a fine of 5 million naira or imprisonment to a maximum term of 12 months. Last week, which would also make it mandatory for victims of building collapse to be compensated by insurance companies, scaled second reading on the floor of the Senate last week. This bill seeks to provide security for victims of collapsed buildings, fill the gap and the failure to provide for a limit of liability in respect of third-party liability, and provide adequate penalty provisions in line with current socioeconomic realities as well. There's still more coming up on Business Report Nigeria. I will be back after the short break. The Manufacturers Association of Nigeria, MAN, has called on the Central Bank of Nigeria, CBN, to help improve credit accessibility for Nigerian manufacturers. MAN confirmed that poor access to funds restrain the productivity and general operations of the sector. According to Segun Ajayi-Kader, Director General of MAN, the Central Bank of Nigeria created several development funding windows with single-digit interest rates to support real productive businesses, including manufacturing. Yet, manufacturers still suffer the dual challenges of scarcity of investable funds and high lending rates. Access to the 1 trillion naira COVID-19 stimulus for manufacturing requires a working capital of 2 billion naira per obligator, with a refinancing facility of 15 billion naira per obligator, and loans have an interest rate of 5%. Ajayi-Kader suggested that the CBN ensures PFIs grant manufacturers transparent and effective access to the available intervention funds. Then banks who fail to disburse the allocated funds should be sanctioned. The Central Bank of Nigeria, CBN, licensed Bureau de Exchange, BDC, operators have declared operational war against black market dealers and foreign exchange speculators for activities that distort the foreign exchange market. President of the Association of Bureau de Exchange Operators of Nigeria, ABCON, Dr. Aminu Gwadabe, said licensed BDCs will continue to defend the naira through regulatory compliance and constantly supporting the BN to achieve a stable exchange rate and attract forex into the economy. According to him, and I quote, "Now is the time to support the CBN to achieve a stable exchange rate. Do not allow forex speculators, street hawkers to take over our business. Constantly comply with CBN's regulators on the rendition of returns and corporate governance practices, because besides stabilizing the naira, the CBN examiners may visit your offices, and if they do, defaulting members will be sanctioned." And to wrap this up, on Sunday, March 14, 14th, Bitcoin surpassed the $60,000 mark. This moved Bitcoin investors to view it as an asset likened to stock markets and gold. This achievement didn't last, however, as the coin couldn't maintain its soared, and in the early hours of today, March 15th, the price fell to $59,088, dropping by 1.22%. Its market capitalization is now at $1.12 trillion. Interestingly, Bitcoin Archive disclosed that Bitcoin worth over $500 million was moved offline by an unnamed investor from Coinbase to cold storage. That is another 10,001 Bitcoin off the market. Normally, investors can move their Bitcoins to cold storage to secure their investment from attacks, as this would pause internet access. And on that note, we end Business Report Nigeria. Thank you for watching. Do follow us on social media at TOSTV Network on Facebook, Instagram, and Twitter. Like and subscribe to our YouTube channel at TOSTV Network. I am Ruel Penawo.